banking stocks good bets with rising interest rates? Hello, thanks for tuning in. I'm Holly Shields reporting for Kalkine Media. The ongoing Russia-Ukraine crisis has further added to the already rising inflation and pushed prices of oil and gas, precious metals and commodities to multi-year record highs. You may remember that since the global financial crisis in 2008, many banking stocks have been making poor financial investments, and lower interest rates have crushed their net interest to the low single digits. These lenders were forced to comply with the sweeping regulatory reforms aimed at shoring up the banking system. They also needed to comply with the capital structure requirements within CET1, as well as the introduction of the bank levy. And then came the pandemic, which restricted banks to effectively providing shareholders with dividends, as UK regulators ordered to suspend dividends to shield them from impairment losses. And according to recent data by the Office for National Statistics, UK inflation has increased to 5.5% in January from 5.4% in December, pushing the Bank of England to raise interest rates and to begin tapering their purchase of financial assets, which is a positive sign for the lenders. In the current economic situation, growth stocks are not performing well against value stocks, as higher inflation leads to higher interest rates and discount rates. This means investors are now turning their attention to safe haven stocks like banks. So that said, let's explore 5 FTSE-listed banking stocks that you can keep an eye on. First on our list is Standard Chartered. The market cap of this multinational banking and financial services company stands at around £16 billion as of the 3rd of March. Standard Chartered has delivered a return of 4.71% to its shareholders over the last 1 year, and its year-to-date return stands at about 16.06%. Number 2 is HSBC Holdings. The market cap of one of the largest banking and financial services companies in the world, HSBC Holdings, stands at £102.8 billion as of the 3rd of March. It's delivered a return of 16.96% to its shareholders over the last year, and its year-to-date return stands at 12.85%. Number 3 is Bank of Ireland Group. One of the traditional Big Four Irish banks, Bank of Ireland's market cap stands at £5 billion as of the 3rd of March. The lender has delivered a return of 62.45% to its shareholders over the last 1 year, and its year-to-date return stands at 14.46%. Number 4 on our list is AIB Group. The market cap of AIB stands at £5.1 billion as of the 3rd of March. The company has delivered a return of 6.71% to its shareholders over the last 1 year. However, its performance was down this year, with the year-to-date return standing at 4.53%. And last on our list is Investec. The market cap of the Anglo-South African international banking and wealth management company stands at £2.7 billion as of the 3rd of March. Investec has delivered a return of 85.64% to its shareholders over the last 1 year. However, its performance as well was down this year, with a year-to-date return standing at negative 2.09%. And that concludes our list. Now that you're up to speed, hit that bell icon to stay up to date. I'm Holly Shields for Kalkine Media.